Shrikant Chauhan joining us from Kotak Securities, and we also have Kapil Shah joining us from MK Global Financial Services. Good afternoon to both of you. Shrikant, let's come to you first. What is your overall analysis of the market right now? Where do you see the Nifty headed over the course of this week, given that we have so much happening on the GST front? And also another question I wanted to ask is that the trend we've seen so far this week is the outperformance of the broader markets over the benchmarks right now. Is this a trend you think can sustain?
Yeah, good evening, everyone. So let's say if we consider the broader market, then in that Bank Nifty is not participating, which is something we are really missing, and that is why the market is not performing. Number one. Number two is that the major component that is Nifty IT is also underperforming, and there also we are not seeing any signs of strong recovery or trending sort of trend. Broadly, because of that, the market is in the range, but at the same time, we are seeing good amount of value buying in the market. I am of the view that the market is like consolidating. It is going to consolidate some more time, and later on we are going to see upward activity. That's my overall view, because the market is finding good amount of support whenever there is a fall in the market. Close to 24,500, 24,400, there is good amount of buying, and you must have seen that domestic institutions bought heavily in the previous month, close to 95, 94,000 crores. And if we consider the entire pattern of last 3 months, then most of the time this 24,000 acted as major support. So I am of the view that till the market is not convincingly breaking the level of 24,500 or maybe 400, 100 points here or there, I'm not having any doubt on the market. We are of the view that the markets are heading higher, and we may see the levels of 25,500 again.
All right, so that's the take coming in on the markets. They should consolidate for some more time at these levels. That's the call coming in from Shrikant. But other than that, we also have Kapil Shah on the show. Kapil, hi, a very good afternoon. And Kapil, the sector churning is also underway. We have been talking about that, how every day one of the sectors is seen to be emerging. Just yesterday, we had seen select PSU counters. Today, I believe it's the day of metals because they are shining bright. So help us understand sectorally, which are the other sectors do you believe that we can expect good momentum and there is some data build up that is seen happening?
So yes, of course. Good afternoon, everyone. So looking at the market, yes, the broader market has remained the same in a broader range. Means on the higher side, we kept on saying 25,200 as a resistance, and on the lower side, 24,500 support. So from past 75 days, we are seeing this particular range. But yes, sectorally, there are certain kind of movements that is happening. Of course, the metal stocks has been in the limelight, and within the metal stocks on the bigger time frame charts, we are seeing that Jindal still has started to pick out the momentum. Means it is doing quite well on a shorter and a larger scale basis. The other sector apart from the metal that is outshining today is the pharma stocks, and within the pharma stocks, if we compartmentalize, it can be compartmentalized into the PHD. So there is the pharma, healthcare, and diagnostics. So within the pharma, hospital stocks, diagnostic stocks, they are showing some sorts of a good movement.
Okay, so that's the take coming in on the entire pharma space. Deepan, I want to get your sense on if you have any strategy when it comes to the insurance place, because a big ask from the street is that GST on insurance premiums be waived off. And if this does play out, it's going to be a major positive coming in, at least for people who are seeking to take insurance. What's your take on this entire space? And if at all you are positive, would it be on life? Would it be on general? How would you approach this place?
See, first of all, insurance is a highly regulated industry, and although we have seen a lot of insurance companies on life and general listed for several years, it isn't that they are given superlative returns. Of course, it's a steady performer, and you may get steady returns. It's a safe sector to invest in as well, but it's not a high growth sector, which is evident from the returns that these companies have generated. Also, from an investor's perspective, it's a very complicated sector to understand, track, and to evaluate stocks. So one needs to keep that in mind. As regards GST benefit to the insurance sector, sure, I think it will be a sentimentally very positive. And a GST cut after adjusting for any GST credits which the industry cannot take, we may see a reduction in the premiums as well. But I don't think that the absolute premium is really a driver for buying insurance. I think there are many other factors as well. So just based on the fact that GST cut is there, you go and buy insurance companies, I'm not sure that makes sense. There are many moving parts in the sector as well. So I would say that when you want to play the GST cut investment theme or that particular play, there are many, many other stocks. I mean, look at appliances, look at automobiles, auto ancillary, even real estate companies. So there are so many choices when it comes to GST cut that I don't think insurance is the best play.
All right, that's the take coming in on the insurance pack. Let's watch out for that as well. But yes, some of these insurance counters, they are a little bit down in trade right now, be it the case of HDFC Life, that is down almost 1% as we speak, and even SBI Life, that is also not seen to be that very well. But along with that, take a look at the markets as well, because in the last 10-15 minutes or so, we have seen a good move in the markets, and especially in Nifty Bank as well, which is now inching higher, and almost 300 points of gain is what we are getting to see. Interesting is that India VIX today is actually down almost 4.5% of the cut, and that's exactly the opposite what we were finding out for US markets, because the CBOE VIX did shot up to almost 3-week high in the US markets while the index was down. But along with that, that's the complete opposite picture that we are getting to see for the Indian markets as well. But with this, viewers, let's move on and let's get you an ET Now exclusive then. And in the ongoing talks with Tata Sons, infra and construction focused conglomerate, Shapoorji Pallonji Group has proposed swapping its equity stakes in the holding company of India's biggest business group with those of various listed Tata firms. Anurag Joshi decodes the details. Anurag.
Infrastructure-focused conglomerate Shapoorji Pallonji Group has proposed a share swap for its planned exit from Tata Sons. SP Group is currently in negotiations with Tata Sons to explore its exit as a shareholder, and two SP Group firms own about 18.4% equity stake in Tata Sons. These are Cyrus Investments and Sterling Investment Corporations. Both are holding 99.19% equity stake. The SP Group has proposed swapping the Tata Sons stake with the equity in various listed Tata companies. And now the shares owned by Cyrus Investments in Tata Sons have been pledged to secure the SP Group's bonds. This bond was floated in 2023 by Goswami Infratech, which had raised 14,300 crore rupees at that time. And right now, if you look at the outstanding amount on the bond, that is 8,800 crores. So one of the holders from the SP Group in Tata Sons, which is Cyrus Investments, that has pledged its stake to secure the Goswami Infratech bonds. The maturity of the bonds is coming up for redemption in April next year. This swap, sources say, would help the SP Group get a better flexibility in terms of liquidity at the time the payment on the bond issue happens. In the past, there have been discussions between SP Group and Tata Sons over an exit, over a probable IPO from Tata Sons. Mind you that Tata Sons has a September 30 deadline for meeting the listing norms as an upper layer NBFC from the Reserve Bank of India. But with no IPO plans in sight, this is an option which SP Group has proposed to Tata Sons.